Hello all, welcome to Universal Group of Institutions, Bengaluru. Today, in this video session, we are discussing a very important topic related to economics. Recently, the government, that is in the first week of April, the government of India, that is through the Ministry of Finance, has released a notification to merge the regional rural banks. Can you see the headline itself? One state, one RRB to be effective from May 1 after the government approves the consolidation of 15 regional rural banks. In this video session, we are going to discuss what led to the establishment of regional rural banks, what were the objectives behind the establishment of RRBs, what is the structure of RRBs, and what has led to the consolidation of regional rural banks. Welcome you once again for the today's session. See, it was during the prime ministership of Indira Gandhi, who has who even had the vision of Garibi Hatao, who even came up with the plan of a 20-point program during the her prime ministership to increase the availability of credit in the rural areas. See, constituted a committee called as the Narsimhan Committee. That Narsimhan Committee on the rural credit has advised or recommended the establishment of the RRB. That is, which committee led to the, which committee's recommendation led to the establishment of RRB? That happens to be the Narsimhan Committee on Rural Credit has led to the establishment of RRB. So why it was essential? If you look at the time, going by the 1971 census, nearly 74% of the population was living in the rural area. And this 74% of the population was dependent upon the informal credit for their credit needs. To enhance or to increase the rural credit, through the formal credit channels, the government established the RRB. So what happens is, based on an ordinance dated 26 September 1975, which led to the establishment of RRB, and later that was formalized by the Act of Parliament, that is RRB Act of 1976. So we see that the first RRB was established on 2nd October 1975, that is on the birth anniversary of Mahatma Gandhi. So the first RRB that was established was Prathama Bank, headquartered in Moradabad, Uttar Pradesh. Later we see Gaur Grameen Bank, Gorakhpur Kshetriya Grameen Bank and Haryana Kshetriya Grameen Bank, as well as the Jaipur Nagaur Grameen Bank as well as. So, what were the objectives? Let us look at the one by one. The objectives. The first objective, to provide rural credit and other banking facility to the rural poor, including small as well as the marginal farmers. As I said very clearly, since the rural population was unable to access the funds from the formal credit channels, and they were forced to depend upon the informal credit channels and getting the loans at an exorbitantly higher interest rate, to increase the penetration of the formal banking channels, they led the establishment of the RRB. Second, to bridge the gap between the commercial banks and the cooperatives. At that time, again, if there was any formal credit institution which was lending to the rural population, there was happened to be the cooperative banks. Now, whereas the commercial banks were mainly located in the tier 1 and tier 2 cities. So to ensure that through the commercial banks, they wanted to increase the penetration of the financial services. So to bridge that gap, they established the RRB. Third one, to promote the financial inclusion in the rural area. As I said very clearly, people were not having access to the financial services like loan, deposits, etc. To increase the financial inclusion, government established the RRB to ensure the access to the formal banking services for the unbanked population in the villages. Fourth one, to support the rural development and to reduce the regional imbalances. See, credit plays a very important role in setting up the employment avenues, as well as to increase the pace of the growth. If the people or the group of people will not have any access to the credit or the banking services, they will not be able to set up or start a business. To ensure the institutional credit to the underdeveloped and backward regions, these I mean the credit can amplify the economic growth. Fifth one, as I said very clearly, to act as a catalyst for the rural employment and the poverty elevation, that is credit led development and support for the self employment initiatives. So, who supervises and who regulates these? RRBs are regulated by the RBI, that is Reserve Bank of India, under the Banking Regulation Act of 1949. And they're also supervised by the NABARD. For the tax purposes, they are treated as a cooperative societies under the Income Tax Act of 1961. Please keep this in your mind. From the examination point of view, the regional rural banks are considered as a cooperative societies for the tax purposes, and they are also supervised by the NABARD. What are the key requirement that says they must maintain the CRAR of a 9%, that is capital to risk asset weighted ratio. They must maintain CRAR of the 9%, and moreover they must allot 75% of their adjusted net bank credit towards the priority sector lending. This priority sector lending limit for the commercial banks happens to be the 40%, whereas for the regional rural banks the PSL limit is 75%. Again, this is something very important from the UPSC examination point of view. So what has happened is, over a period of a time, the regional rural banks failed to fulfill their objectives, and they started to accumulate more and more NPAs, or they started to face huge amount of the financial losses. So based upon the committee, that is Dr. VS Vass, on the flow of credit to agriculture and related activities from the banking sector, which examined the relevance of the RRBs. This particular committee has suggested the consolidation of RRBs. That means rather than having a large number of RRBs, it is better to have a very few number of RRBs, so that there is a greater synergy in targeting the unbanked population. So what we see very clearly is, we see the four different phases of the consolidation of the RRBs. The first phase that took place in the 2006 to 2010, later 2013 to 2015, the third one 2019 to 2021, and the last one which has begun this year, that is the 2025. Can you see very clearly how the number of RRBs has declined over a period of a time? From the phase 1, when they started it, that has declined from 196 to 82. Phase 2, 82 to 56. Phase 3, 56 to 43. Now the government has the vision of bringing this number to only 28. You can see very clearly the different phase has a different objective: to resolve the inefficiency and improve the financial strength of the regional rural banks, to ensure RRBs for the better efficiency and scale of operations, to modernize the RRBs and ensure the long-term financial stability, and the fourth one, which is one state, one RRB policy. The reasons why they are doing this: one, as I said very clearly, financial strengthening. RRBs were making huge amount of losses. Their NPAs were increasing, and to by consolidating, it is going to increase their financial stability. Second one, to enhance the operational efficiency, merging the smaller RRBs reduces the duplication of efforts and enable the better use of technology and cut down the administrative cost, as well as for the better credit delivery as well, because the large and the merged, whose balance sheet happens to be very strengthened one, they are in a better position to meet the needs of the rural credit, as well as they can support the targets that were being set by the RBI under the PSL limits. Fourth one happens to be the regulatory compliances, that is the merged RRBs are more likely to meet the regulatory norms like the PSL or the CRAR. As I said very clearly, they are supposed to maintain of the CRAR of the 9%, and both RBI and NABARD can supervise better if we have a very few number of the RRBs. So what we see as of March 31, 2024, there are 43 RRBs with the network of more than 22,000 branches functioning in a 26 different states and 3 union territories of Puducherry, Jammu and Kashmir and the Ladakh. RRB Act of 1975 was amended in 2015. The one important provision that was brought in by was that, see, the RRBs can increase their capital, because if you look at the capital base, I mean, who funds the RRB, you can see here very clearly the RRBs are currently being funded by three people. One happens to be the central government, another one happens to be the state government, and another one happens to be the sponsoring bank. Can you see here very clearly where central government owns 50%, state government owns 15%, as well as the sponsoring bank owns the 35%. Can you see some of the banks that currently Andhra Pragati Gramina Bank with a sponsor bank called as the Canara Bank. Similarly, Dakshina Bihar Gramina Bank sponsor bank is a Punjab National Bank. Then Chaitanya Godavari Gramina Bank with the Union Bank of India. So different public sector bank, he has sponsored the establishment of the regional rural banks. And I have just one small question for you. Do comment in the comment section. Currently India has how many public sector banks? So let us look at the other things. What the change that was being brought in by the amendment of 2015? The amendment of 2015 has allowed these regional rural banks to raise the capital from a different sources other than the central government, state government, and the sponsor bank, provided that the total shareholding of central bank and the sponsor bank cannot fall below the 51%. So these are the certain things that you need to keep in mind from the UPSC civil service examination point of view. So that's it in this video session. Do like, do share, and do comment if you have any concern. Thank you.